Sunny Agarwal too joins in, and we've got Ruchit and Kunal already with us. Sunny, hi, afternoon. Just wanted to understand, with the earnings season now done, what's the takeaway in terms of mid and small caps which are looking attractive?
Yeah, good afternoon, Aisha, and thanks for having me on the show. I think definitely very strong set of numbers from, in fact, all the companies during the quarter two. And as you rightly pointed out, especially on mid and small cap pack, we have seen that Nifty mid cap 150 has reported close to 26% kind of year over year profit jump, and Nifty small cap 250 has reported 34% YY jump in profit. So definitely a very strong beat across mid and small cap pack. And within this pack, what we believe is that few sectors which have delivered very strong set of number, where the profit pool is significant. One is chemicals. Chemicals seems to be turning around as we speak. Selective auto ancillary companies have reported a very good set of numbers, which we believe should continue going forward. Cap goods, engineering, precision engineering component companies have reported very good set of numbers. Metals and mining, obviously backed by a very robust underlying commodity prices. And within BFSI, especially NBFC pack have reported a decent set of numbers. So I think across the board, we have seen a very strong set of number across, within a mid and small cap pack. We continue to remain bullish on a few pack like auto ancillary, where we feel because of a very strong sales momentum in the two-wheeler passenger vehicle pack, and at the same time construction equipment is another segment where we feel volume is likely to pick up going ahead. So auto ancillary is a way to participate in this growth story. And within metal and mining pack, we believe the metal products, especially companies focusing on structural steel tube, as well as a few ancillary related to stainless steel companies, can be on radar from a medium to long term perspective.
Okay. Sunny, just in terms of the IPO fervor, right? Plenty of opportunities coming up in terms of new companies listing themselves. Anything that's really standing out?
Harsh, I think today Temson,
Yes.
last day for Temson in terms of IPO. So again, that a very unique business which we feel which is into an heat sensor. Again, a market leader over there, especially on the heat transfer, heat sensor side. So that's the one company where we have recommended subscribe rating. In addition to that, Symbiotic Pharma, where on the face of it, it may appear to be expensive in terms of valuation, but what we believe is that 800 crore capex which the company has done over the last 3-4 years, that will materialize, that will start delivering numbers over the period of next 1 or 2 years. So again, Symbiotic is one company where we have a subscribe rating. In addition to that, few companies which have already listed and have reported a solid set of gains. So few companies which we like among that package. One is Caliber Mining, which is again a proxy play on a coal mining in India. So Caliber Mining is the one company. Indomim, again, a buy on dip kind of strategy. Already we have seen a very strong run up post listing. So again, a play on precision engineering. So maybe buy on dip is the one strategy which one can adopt. Behari Lal, again, a very strong set of listing recently. Buy on dip again strategy. So I think there are many unique businesses which are getting listed in this round of IPO. And I think I believe that many of them will continue to deliver an healthy earning growth and hence should sustain the valuation going forward.
Right. Okay, that's the take coming in right now in metals. Ruchit, curious to know, where is it that you're finding trading opportunity, because metals is a leading sector today?
Certainly, I think metals is a leading sector, and for the near term, it should still could do well. We have seen a good amount of move in the base metals as well in last 2 or 3 trading sessions, be it commodities like zinc, gold, silver. So whenever we see an upcycle in base metals, the stocks do react positively. So I think Hensing is one stock which we like from a technical perspective for the short term. We have already seen a good price-wise as well as time-wise correction over the last few months. So this is one stock where one can expect a momentum in the near term towards 635 kind of level. So from a trading perspective, one can create fresh longs in Hensing from the metal space with a stop loss below 590, even for potential up move towards 635 kind of levels. And amongst the other broader markets, Siemens is one stock where technical structure looks quite positive. You can see that today, in spite of such market where overall we are not witnessing any great strength, The stock is up by 5%, and recently also the stock has managed to form a good support base around its 20-day mark. So even when the markets are not doing good, the stock is not breaching its 20-day EMA. Price up moves have also been supported by good volume. So I think this outperformance could continue in Siemens as well. Potential up move towards 4350, 4400 for positional traders, I think could be there in Siemens as well.
Well, Manappuram, Muthoot, those are of course the two winners today. Also want to see the entire jewelry pack because that also with the uptick in gold is actually holding out well. Just wanted to get your sense right now, Sunny, as to whether these are the levels to add positions onto any of the gold financiers or gold retailers for that matter.
I think again one should remain slightly cautious, as we all know that the competitive intensity in the gold finance pack has gone up significantly with the many new players that have ventured into this. And if you remember, Muthoot has already called out for this during their analyst call that because of increase in competitive intensity, their margins may come under pressure going forward. And we have already seen one kind of cycle played out during the 22-23 when the entire gold finance industry witnessed pressure on the margin because of increase in competition. So that is something which one should keep in mind. But having said that, obviously, a rise in gold price augurs well for the entire gold finance as an industry, as LTV keeps on reducing and they have more room to lend to an existing borrower. So I think continue to remain cautiously positive. So maybe if somebody is planning to enter into a fresh trade, stop loss is something which one should keep in mind. The only key worry is the margin, which I feel should be, which will get more clarity as we move during the Q2 and Q3. So instead of gold finance, what I feel rather than if somebody want to ride on rise in gold price, directly buying gold ETF is a better solution rather than riding it through equity. And gold jewelry companies, they also benefit because of on the account of inventory gain. So maybe within the gold jewelry pack, few companies are trading at a reasonable valuation. So PN Gadgil is the one stock which we like. Kalyan again, maybe buy on dip strategy one can adopt in Kalyan.
The other one is the platform companies, and they've been in focus. Of course, not all of them together, but today Urban Company, for example, is in focus where MK has initiated coverage and they've cited benefits from India's large fragmented home services market accruing to Urban Companies. Snehi here with the highlights from that note first off.
Well, yes, so Urban Company is a stock that's doing very well in trade, not only today, also on Friday, because remember on Friday it was UBS who had initiated coverage on the stock with a target price of 180 rupees per share. Today it's MK that has initiated a buy rating on the stock with a target price of 190 rupees per share, posing a 19.5% upside to the close price on Friday. They say that Urban Company leads India's online home service market, supported by large fragmented addressable market and higher service densities, improving customer satisfaction, partner utilization and earnings, and that is overall strengthening the platform flywheel. They say that India's consumer services NTV, that's the net transaction value, is expected to grow about 20% CAGR during FY26 to FY29. This is of course excluding their InstaHealth category. Now for InstaHealth, they say that offers a large market opportunity, increasing the platform user frequency, customer stickiness and cross-selling services, while the street is worried about the profitability of InstaHealth and the growth roadmap ahead, and of course the competition that it's seeing from people like Snapbit, from companies like Slapment rather. MK believes that this could be a good cross-selling opportunity for the company. On the back of all of this, they say that aggressive InstaHealth expansion is expected to raise the adjusted EBITDA losses to 940 crores in FY28, but this is where they expect this loss to peak out. So that's what they're saying. They also say that MK expects operating leverage to drive 47.4% adjusted EBITDA CAGR for the India consumer services, and incubation of InstaHealth and Native alongside weak international profitability could delay the consolidated profitability until FY30. So this is another statement to be watching out for. They also say that revenue is projected to increase to 1,560 from 1,560 crores in FY26 to 3,350 by FY29, and consolidated EBITDA losses are expected to peak at 730 crores in FY28 before improving. So all in all, a very bullish note coming in from the house of MK on Urban Company.
Okay, that's Urban Company, and brokerages still recommending a buy on that stock. We'll take a very quick break, continue having our market discussion on the other side.
Welcome back. And, you've got some movers in trade. Hexaware Tech is up 5.25%. You've got Seagull India on the back of order wins. That one is up 2.5%. Piramal Finance is down 2.5%. TVS Supply Chain is the other one, 12% up on the back of their tie-up with SunQ. And as a result of that, you're seeing a decent move on that one. Let me go across. Sunny, I wonder what the take with regard to Hexaware Tech is, and everything that's come out of the AI day. What is it indicating towards any changes that you all have made to your target price and on the back of that?
Yeah, coming to Hexaware, or in fact the entire IT pack, first of all, I think there has been no negative surprise when it comes to the recently concluded quarter, and everything is on track as far as FY27 numbers are concerned. And as we see the reversal of trade across the globe from an AI, the traditional IT services business is again coming back on radar of an investor. Having said that, one has to keep in mind that ultimately FY27 is a year where earning growth is likely to be muted, where most of the tier 1 IT companies will report kind of 3 to 4% kind of bad growth, and mid-size IT companies, including Coforge, Persistent, or Hexaware, where the growth will be in the kind of low double-digit kind of growth. Valuation definitely have turned comfortable. So maybe I think on and off we will see that the narrative keeps on changing against AI, against or in favor of traditional IT services business. But the fact of the matter is that Street is looking forward to FY28 and 29, where there can be a strong visibility of double-digit kind of earning growth from an entire IT pack. So I think today's reaction may be to the deal win, but ultimately the companies which will deliver on consolidated basis, including AI as well as the traditional IT services pack, those companies will emerge to be the winner. So again, within IT pack, we continue to remain more bullish on Coforge and likes of Persistent, and within tier 1 IT pack, companies like Tech Mahindra, which has consistently been delivering margin expansion since last 7 to 8 quarters, and HCL Tech among the top 3 players.
Okay. Ruchit, your take from within the IT pack and Hexaware Tech in particular, do you expect this 5% kind of move sustainable?
Well, the follow-up move is more important, although we have seen a good move today when the overall sector has been sideways. But recently, Hexaware Tech has traded within a broad range with 100 kind of levels acting as a resistance. So I would wait for the follow-up move that if we see these levels of 600 getting surpassed in a day or two with good volumes, then we can expect a sustainable up move. Apart from this, if you look at the entire IT pack, I think Coforge is one stock which has relatively done well over last 1.5 months when the IT as a segment has shown a pullback move. And that's where that outperformance could continue, we think, going ahead as well. On the lower side, 1800 has now become a good support for the stock. So any decline towards the support, if comes, then one should take as a buying opportunity. And we can expect the stock heading higher towards its previous swing highs, which were 2000 and beyond.
Richard, we'll let you go on that note. Thanks as always for taking the time out and joining in. And we've settled in pretty much in that same range. It's not moved anywhere from there. Just that 24,200 mark has stuck by for the Nifty futures, SBI Life, Tata Motors PV, Bajaj Finance, Shriram, BEL. These have been some of your laggards. And on the flip side, the support has really come in from the metals names. They've done the heavy lifting. Other than that, a few odd technology names and Infi, HCL Technologies have managed to hold out. Wipro as well has been quite okay. And then Bajaj Auto and Interglobe Aviation, which have also looked quite okay for themselves. But yes, within the broad end of the market, Power India, Oracle Finance, Premier Energies, Dixon, these have been the drags, along with Bandhan Bank, which has now dipped about almost 0.7%. And Alchem as well, which is lower by about 0.4 or so. And then, yes, GMR Airports, like we just flagged off, along with Adani Ports, that's also a drag. It's down about almost 1% as we speak right now. Sunny, just wanted to understand what's the view on Pharma, given how massive the recovery has been from the March lows. It's really been that hiding space. The news flow and the fundamentals as well are in place. But where is it that you're confident of putting fresh money to work?
As you rightly pointed out, I think Pharma has seen a very strong recovery from a March low, and again it's backed by fundamentals where we have seen all the companies focusing on CDMO or CRO have delivered a fantastic set of results during this quarter. So within Pharma pack, again, we would like to continue to remain constructive on mid to small cap CRO or CDMO play. So companies like Sai Life Sciences, Concord Biotech, Anthem Bioscience, Rubicon Research. So all the new companies which have recently got listed during the last 12 to 18 months, those we believe can continue to deliver an healthy set of growth going forward. No doubt, Divi's being Divi's and Laurus of the world, which are kind of leaders over there, they have also delivered a strong set of numbers. But I think price have run up and most of the positives are already being discounted. So I think mid and small cap pack is a area where we still feel there isn't some potential for stock to move up in a medium to long term.
Okay. Also wonder from the auto anchors, anything that's standing out for you, Sunny?
Sorry, Harsh, your voice was not clear.
Anything standing out from you within the auto anchor space?
Yeah, so amongst an auto and spec segment, what we feel is that a few companies like Precall, where we have already seen that the company has announced a demerger of its DICV as well as actuation business. So we feel that within Precall, the DICV business may attract some large marquee investors. So Precall is the one name where we feel will continue to deliver an healthy set of growth going forward, led by an growth in incumbent OEM and as well as new segment like disc brake, where the company has recently forayed into. In addition to that, Lumax Auto is another stock which we like, where we believe the fair value of the business is closer to 2,800 rupees. So here again, predominantly a large share of business comes from likes of Mahindra and Mahindra, Bajaj Auto, within Bajaj Auto, Chetak. So all the key OEM are growing at a rapid clip. And at the same time, recent acquisition of CNC business, so wherein they have entered into Maruti and Tata Motors, that will continue to deliver an healthy growth. So Lumax Auto is another stock. Among the auto OEM name, what I feel is that Hyundai Motors, where and as well as Maruti, so both the companies have reported a muted margins during the quarter one, and that was, we believe that was on account of one-off reason for both the respective companies. And going forward, the margins should recover for both the businesses. So among the PV play, Hyundai Motors as well as Maruti. And among the two-wheeler, we have already seen a strong run-up in TVS and Bajaj. So Eicher is another stock which we feel can still have a potential to deliver a healthy return from here on. So Eicher Motors from two-wheeler pack.
Right, okay, since we're on the subject also of the two-wheelers, Bajaj Auto has launched the new generation Pulsar 150 and 125 in India. The two motorbikes retain the familiar Pulsar design and performance character, but get a new engine altogether and a gearbox, chassis, and several technology upgrades as well. Anurag Joshi, my colleague, joins in with more.
Well, it's been a great challenge creating these bikes. As you know, the Pulsar 150 has been like a favorite for the last 25 years. It's evolved over the years, and people love it for what it is. So really, we wanted to change nothing, but then change everything at the same time. So it's a bike where we have retained the marquee silhouette of a Pulsar 150. But within that, there is absolutely nothing that's carried forward from the current bike. We've taken forward the core DNA of what a Pulsar 150 is. A strong masculine silhouette, a powerful signature headlamp, sharp tail, very comfortable ergonomics, and that we've taken forward. So what you see in the new 150 and the same design follows through to 125 as well is pretty much the same silhouette. From a distance, one might think, oh, nothing has changed. You come up close and you find nothing is the same. So it's got a much more muscular tank. We've narrowed down the waist, so it gives a much better, a knee engagement for the riders. It comes with an all-new engine, completely new engine. It comes with a new chassis altogether. So right now the engine is a part of the frame as a stress member that gives it more stiffness and therefore much better handling and control on the bike. There are a whole host of other features. We moved it from a twin shock to monoshocks. There are a lot of segment firsts. So the bikes come with a TFT, 5-inch TFT display with Google mirroring from the phone. And that's something which is unheard of in this segment and is of immense convenience to riders. There is a new LED headlamp with a throw that's much better. Ride modes are there. There are 3 ride modes in this bike. There is crawl tech, which means that even at very low speeds and without giving any throttle input, the bikes don't stall. And that's a requirement today in our busy, city traffic. So.
All right, so that's the take coming in. Kunal, from within the auto pack, your favorites?
Auto, the auto OEM stock-wise, I would believe Bajaj Auto, Hero MotoCorp are the ones which are looking quite strong at the current levels. Eicher Motors has also been the one which has been doing fairly well, specifically with the recent breakout about 7,500, 7,700 mark, and the stock has moved up marginally higher from those levels. The only laggards so far, comparatively from the auto pack, have been the 2-3 major names, like so, for example, Tata Motors PV has been into a deep corrective phase. M&M has struggled to cross back above the 200 moving average. Maruti also, I think, a stock which was a decent performer in the second half of 2025. That stock has also somehow gone into a patch of its own consolidation. TVS Motors is the other stock which has done exceptionally well from the two-wheeler pack. The stock perched at the 4,400 mark. In fact, in the last 2-3 days, previous week, the stock had seen some heightened volume activity, indicative that maybe the start of the fresh expiry, TVS Motors can also come back into a fresh breakout.
Okay, those are some of the auto ideas that are looking interesting. Just refreshing the screen to check in on where the closing rates are headed then. While it's really been a quiet day for the index, metals have held out. Infosys, HCL Technologies have picked up a little bit along with Wipro. Oracle Finance, though, has been lower by about 2%. But then again, it's largely been trended by some of the cap good names, metals, and their entire gold theme has sprung up with Manappuram as well as Muthoot taking the lead over there. Some profit taking for an RVNL, for a Dixon, which is closed in lower than over 2.5%, Premier Energies, Bajaj Holding. These have all been laggards in today's trading session. Godfrey Phillips as well has been active, about 0.6% lower is where it's shutting shop. Dalmia Bharat lost about almost 1.5%. And KEI, the big winner from last week, after that massive order win, that's also closed in just mildly soft or so as we speak right now. Sunny, just on the EMS play, curious to know how is it that you're reading into the news of, the government giving it a further push, EMS 2.0, and whether any of these stocks within the EMS sector are still investable?
Yeah, so coming to EMS, I think definitely augurs well for especially mobile manufacturers. So I think the basic condition we say that the incremental sales growth every year should be more than 5,000 crore on FY26 as a baseline. So what we feel is that maybe on the mobile side, only Dixon is the one player which can benefit out of this EMS2 scheme, especially on mobile side. But having said that, we have already seen a very strong rally in Dixon, and we believe the company is trading closer to its fair value. Amber recently has announced their venture with an Oppo to manufacture their mobile phone in India, but that is something which will see a significant impact going forward in FY28 onwards. So overall, on a consolidated basis, what we feel is that we have more comfort on Amber as well as Syrma. So Amber on account of AC penetration, which is very low in India. So that business is likely to scale up going ahead. Electronic segment, Power One recent acquisition should start contributing. And mobile again should be one of an growth lever going forward in FY28. So Amber is the enterprise is one of an topic. And Syrma again continue to deliver a very solid set of numbers backed by a very robust order book. So Syrma, if we believe that should able to sustain a double-digit margin. So Syrma SGS, maybe buy on deep strategy will work on Syrma from a medium to long-term perspective.
Some of the life insurers and, Sunny, very curious to see that we've not seen too much of a move on the life insurance pack, even though the numbers were well ahead of what the street was penciling in. What's the take there now? It's been a while since we've seen any returns on some of these.
Yeah, I think again coming to a life insurance segment, what is concerning on the from an analyst perspective is that the consistency in terms of VNB and various regulatory challenges, whether there is likelihood to be any cap on commission, which is likely to impact maybe a distributor like Turtle Mint or PB FinTech, and that is something which I believe is something which is which may be one of an cure. Right? But having said that, we believe that within life insurance pack, LIC again, which is trading at a very reasonable valuation, trading at 0.7, 0.8 EV to embedded value as compared to an private peers like HDFC or likes of ICICI trading at 2.5 to 3 times price to embedded value, offer a decent protection on downside, and the risk reward can be favorable over there. Other players which are doing well on life insurance space relatively are basically Go Digit and the likes of Niva Bupa, where on a month-on-month basis we are seeing a decent uptick in terms of premium collection. So those are the few names which one can consider. But I think overall amongst the BFSIs, I have to pick one relatively well off pack. I think AMCs are relatively well placed because compared to life insurance pack, there we have got a structural uptick in terms of inflow through SIP route. At the same time, the new products like SIF or likely introduction of PMS for a mutual fund, that again are a relatively better yielding product, and in case that start contributing aggressively on AUM side, that can further give a leg up in terms of earning growth for AMC players. So compared to life insurance, I think AMC is a better pack if somebody want to deploy fresh capital at current juncture.
Right. Okay, 50 seconds left to go before we wind up for the day. And Kunal, once again, an extremely quiet day for the index. When do we break out of this range?
Yeah, that's the bigger question. I think generally breakouts, as such happen after a fresh expiry start. But the concern is that it's been almost 50 days for the Nifty to try and trade into this range. Almost the last 2.5 odd months is where the Nifty is grappled to this 300 point, 500 point kind of a trading range for itself. So very difficult to anticipate that when and what could trigger this breakout of the indices. But generally we see that at least 3 months of consolidation is a good enough time for the index to break past, or after 3 months is where the index generally breaks past above consolidation. So hopefully the month of September is where the markets can finally snap out of this trading range.
Metals are the biggest mover in the cash session today. Kunal, last 15 odd minutes of trade, we've seen a decentish move. JSW Steel, Adani Enterprises, just some of those movers in trade from within the Nifty pack, and metals in particular. I wonder what the call specifically on a JSW Steel is at this point of time. We've seen a very decent rally. We were sub 1,000 on the stock price not too long ago. We're currently at 1330. What next?
So yeah, I think metals, particularly as a sector, is something which has been bullish on over the last, I think, few weeks. Specifically when the likes of Hindalco, etc., were trading at closer to their long-term averages around say 930, 940 approximately. And in that same time span, I think JSW Steel was one of the ones which was trading at 1220, 1230 mark. The stock has been into a very slow, gradual uptrend, but it's now looking quite strong. It's as if that the stock is picking up good momentum in stages, which started off in a very slow, gradual rally, and now it's picking up pace. So that I think is attractive. But when I was looking at the charts comparatively in terms of the relative strength strategy, Tata Steel is something which I think should also be could also be looked at from the metal pack. The stock has relatively underperformed most of the other peers in the metal stocks, and looks like that it could be a time where maybe the weighting within the metal stocks could be shifted from the likes of Hindalco towards the likes of Tata Steel as well as JSW Steel.
Okay, that's the trade coming in on metals right now. But Sunny, just wanted to address private banks as well. Got a very interesting take earlier this morning from CLSA as to why HDFC Bank is their top pick, and that's where you have the only bottom-up idea perhaps. Would you concur with that view?
Yeah, definitely, at least in terms of valuation, we are seeing that likes of HDFC Bank trading at a multi-year low, and at the same time going forward, as we all know that historically during the last 2-3 quarters there has been a case of a balance sheet growth which is leading as compared to an P&L growth because of pressure on margin. So going forward, as the NIM stabilizes, I think all the private banks should start reporting a kind of double-digit kind of NIM, net NII growth, and that should help, or that should augur well in term on the back of very strong, reasonable valuation. So no doubt, ICICI Bank has been a leader, and there we have seen a strong outperformance. Coming to other private banks, I think HDFC Bank maybe FY27 is a year where we may see a growth at par with an industry, and then FY28 onwards, maybe the benefit of merger will start playing out, and then gradually we will see an outperformance as compared to an industry growth. So if somebody is 12 to 18 months has got an investment horizon of 12 to 18 months, HDFC Bank definitely one can consider. And even Axis Bank, we have seen that most of the banks this quarter have focused on corporate lending, which has led to some pressure on margin. So going forward, as the books shift in favor of retail, we will see a gradual expansion in margin also. So even Axis Bank continue to remain our top pick among the private banks.
I wonder, Kunal, what the view with regard to a Vishal Megamart is, a 10%-ish kind of move on the stock price today. Can that sustain? Should one continue to be long on a counter like this?
See, I think what happens is the stock was beaten down massively over the last 3-4 months. I think Vishal Mega Marts was almost at 150-55 not long back, and the stock fell down to 104, 105 just about till last week or so. So after like a 30%, 40% correction, you're bound to see some bounce back. The initial flurry of bounce back happens is on the back of news flow. When there's some kind of a positive news flow, you see a jump up in volumes, you see the stock opening with a gap up. But the concern with today's move for Vishal Megapart is the selling which has come from the highs, and that has led towards maybe a resistance of sort at 115 to 116 mark for the stock. So I would probably be a little skeptical in towards the stock price seeing any kind of a major follow through up move, and the gap which has been created today, hopefully that gap would probably be at least partially filled in the next subsequent days. So my expectation is that the stock over the next few days should come back into a corrective phase.
Okay, closing in for the day, and the sectoral texture is pretty much the same. In fact, if we can just bring up the heat map for how the individual sectors have panned out, while metals, of course, has taken a lead, would be curious to see where is it that the drag has really come in from. And it's been cement, which has been a rank underperformer today. Defense as well lost about almost 1%. PSU banks have been a drag. Nifty Bank as well did not do anything. Financials, private banks, consumer durables, chemicals, autos, they were largely flat, along with pharma and healthcare. FMCG as well, a flattish move. Oil and gas as well, quiet. IT just a smidge of a green. And I think the only significant winner today has been the Nifty Metal Index, 1.5% higher for that particular index, along with realty, which has also managed to eke out a gain for itself. But again, very marginal gains at that, nothing too meaningful. So it's really been metals which has been the only standout performer, so to speak, on the upside. Let's take a look at the Nifty composition as well, and how some of the Nifty names as well panned out, because you did have Hindalco, which contributed maximum to today's index move. Infosys, HDFC Bank, JSW Steel, though I doubt HDFC Bank because it closed in a little soft actually eventually. Bajaj Finance as well has been a drag. Reliance, SBI and ICICI Bank, the big ones, haven't quite participated in today's move. BEL as well has been a rank underperformer today, along with Nestle, HDFC Life, a Kotak Bank, Axis, Maruti, Bharti. These have all been the drags today. Flat for L&T, flat for Unilever. Eicher did not do anything. ICICI Bank as well, mildly soft. Tata Consumer, TechM. Nothing meaningful really is what you saw. But Kunal, for tomorrow, would you pin your hopes high on metals? And do you sense that this move on metals will stay?
Yeah, it looks like that the move in the metal stocks will stay, because I was looking at the dollar index chart also, and it's ebbed off quite well from a point of 101 just about a couple of weeks back towards sub 100, sub 99 or 99 thereabouts for the DXY. That I believe could probably aid the rally further for the metal index. And I also sense that now the move is getting a lot more consistent within the metal stocks. Earlier it was just Hindalco and Nalco which had done very well. I'm talking of this over the last, I think, a week or two back. And now that move is getting trickled to the other names. You're seeing SAIL also, for example, that stock breaking out. Vedanta, I think, had a fantastic day last week, Thursday, Friday, where the stock moved up, I think, 3%, 5% in a matter of couple of days. Tata Steel, as I was pointing out, is nearing a breakout. JSW Steel is the one which is inching towards a breakout. So it looks like that the metal stocks rally, which started off to be very, very restricted towards maybe 1, 2 names, is now getting more broad-based.
Okay. All right, just quickly looking and counting down sectors as well as to how they've performed today. At least 1.6% high on the Nifty Metal Index. You've seen some good, strong move, at least from that particular pack. Welspun Corp within that, Kunal, and that was a big gainer on Friday as well. Continues to gain in trade today as well. 4% move on Welspun Corp, top gainer on the Nifty. Sale as well, doing 3.5%. But Welspun in particular, anything changing here structurally, Kunal, just given the kind of back-to-back moves?
No, I think generally these kind of moves, they happen into stock prices when they run up exceptionally high. You know, we look at this in the Elliott wave structure, and it looks like that the one of the waves in which the volumes, they tend to accelerate when the stock price reaches some sort of a resistance zone. So I think we are hitting that kind of a zone for Welspun Corporation, and that's why the volumes over the last 2 days have been on the slightly higher side. But today's volume is almost or less than half of the volumes which are seen on Friday for the stock price. So I would probably believe that once volumes starts to ebb off, you would generally believe that stock prices go into a price correction or a consolidation. So I would believe that start of next week or from the fresh expiry onwards, you might expect Welspun Corp to come back into a corrective phase.
Okay. All right. Private sector banks, Kunal, what's the view there? And your top picks from within that basket, give us a sense.
So Kotak Bank is something which looks attractive over here. As of now, the stock has regained or reclaimed back its 200 moving average. Compare this to ICICI Bank and HDFC Bank. ICICI Bank has been one of the more moderate charts right now. HDFC Bank, of course, we all know that the stock has been a big laggard, more than a 10% correction in the last 1.5-2 months for HDFC Bank from those 850 levels to 730, 740 where the stock is trading right now. So I think as of now, Kotak Bank is something which starts to look a little bit more better. That negativity which the stock had exhibited, I think in the month of July, when the stock corrected from 420 levels to 360, 370 thereabouts, it looks like that the major part of the negativity is now behind and the stock is now coming back into its own. Axis Bank is also trying to find its mojo back again. 1250, 1260 is a bit of a resistance zone for Axis Bank, but I would sense that once the stock scales past about this minor resistance is where the stock can also be considered as a good swing trade.
Okay, that's the take coming in right now on private banks. Sunny, let's get closing comments in from you as well. Where is it that you think leadership sectorally will actually gain momentum, if at all?
Yeah, Aisha, I think again, what I believe is that ultimately the companies which have reported good set of numbers and are likely to do well going ahead. So what we feel is that banks, selective banks across private as well as public sector will continue to take a leadership going ahead. Among the mid and small cap pack, as discussed earlier, auto ants is another pack which we feel can continue to do well. Building material is the one segment where we have seen a very strong turnaround during this quarter. So companies like Kajaria, Century Ply, Green Ply, Green Lamp, Stylam, all the building material companies we feel should take a leadership as we move ahead. And in addition to that, small and medium-sized defense pack companies like Zen Technologies should continue to outperform as we move ahead. So I think ultimately it's a stock pickers market rather than getting glued to an benchmark indices. I think most of the wealth creators are lying in the bottom end of top 750 companies, and there one should focus if somebody want to create an alpha in a short to medium term.
Sunny, great to have you on the show. Kunal, we'll see you again tomorrow. In fact, on that note, we're going to wind it up right here at this edition of Closing Trades. It's a goodbye from Harsh and me.